we got to put on the money green sunglasses for this. So what is a stock or a share in a company, and how do I buy one? Okay, so a stock in a company or a share of a company is a representation of ownership in that company. So legally speaking, the owners of the company own stock in the company. So if you own a share of Disney or common stock of Disney, or if you own a share or stock in GE or Google or any of these companies, are you an owner? Absolutely, you're an owner, and you can vote for the board of directors. So the shareholders vote for the board of directors. The board of directors vote for management, the executive team, and they're all responsible to the shareholders, right? So they're all responsible to you as a shareholder when you buy this piece of paper. So if a company is worth $1 billion and their stock is $1, that means they have 1 billion shares out there for you to buy. Or if the company, to put it in another term, if the company issues 1 billion shares, it has 1 billion shares outstanding, and they want $1 for each one, they're saying our company's worth $1 billion. So if you're a publicly traded company, or if you're looking at publicly traded companies like GE, like Disney, like Google, like Yahoo, like Bing, or I'm sorry, like Microsoft, all these companies have a share price. That share price determines what, multiplied by how many shares there are out there, determines the total value of the company. This is called the market cap. We explained this in another video a while back. So basically, a share, a stock is a piece of ownership in that company. Now, every once in a while, some companies issue a dividend, right? So that means every once in a while, the profits, after they ran their operations and they paid the CEO and they paid the marketing department and they sold all their widgets or iPhones or computers or cars, whatever their product is or services, they had a profit left over. That profit is meant for the owners of the company. Who are the owners of the company? The stockholders. That's right. That's why you buy stock, to become an owner of the company. So this is one way people make money with stocks, right? They buy the stock, the company's profitable, and decides, keyword, to issue a dividend. Now, you get this dividend on your stock. So let's say there's 1 million shares in the company. You own one, right? And they made $1 million in profits that they're going to issue as a dividend. You don't get $1 million. You get they issue the $1 million divided by how many shareholders they are, or how many shares of stock there are outstanding, right? So if you own one, you'll get $1. If you own two, you'll get $2. If you own three, you get $3, right? So on and so forth. So that's dividend. Some companies don't issue dividends, so why would you buy that stock? Well, people are betting on appreciation. So they're betting, for example, that we bought the company, it was worth $10 million. It was $1 a share. And now 5 years later, it's invested. They sold product, they reinvested, they sold more product, and now the whole company's worth $100 million because they're sitting on 50 million cash and they're expecting another 20 million revenue, whatever the scenario may be. So this essentially has the buyers and sellers increase their prices, right? So now you're not willing to sell that stock at the same price as you bought it before. It's worth more, so you're going to sell it for more. And if you hold it and someone else is buying and selling for more, now your stock appreciates in value and the stock price goes up. So those are generally the two reasons why you're buying stock. It's either appreciation or some kind of dividend value. So that's what a stock is. How do you buy it? You buy it through a brokerage account. So I'm not going to waste your time with the technicals here, but basically you open up an Ameritrade account or a Scottrade account or a Merrill Lynch account. I'm not recommending any of these. I use some of them, but just to be clear, I'm not recommending any of these. Just type in stock brokerage account. You'll see a ton of them. They all have fees, most of them to buy stock and then again to sell stock. So when you're doing your analysis and you want to play the scenario out all the way through, whether your stock is going to be profitable, understand that you're paying a certain amount to buy the stock and you're paying a certain amount to sell the stock. So factor that into your profit and loss when you are doing any kind of stock analysis. So that's what a stock is. Stocks are that's where you can buy stocks. Now, stocks are traded on stock exchanges. That's the difference between Johnny Appleseed's Backyard Barbecue Grill having stock as shareholders and a company like GE is that a private company, I can go and grab my cousin and my brother and a few of my aunts, right? And we put them all together. So we're going to start a company. I issue stock to them. They issue stock. I issue stock to my cousin, my aunt, and myself. Everybody has stock. At the end, we can split profits. We can work out agreements. That's a private company. To become a public company, you have to list on a stock exchange. So next to a stock ticker, usually when you're looking up a stock, and that's what I'm trying to do here is describe. If you're on Google Finance or Yahoo Finance, just open up a page and a lot of this stuff will be clear. But you're going to see next to the stock ticker, it'll usually say NASDAQ or NYSE or OTC Markets or Frankfurt Stock Exchange or some kind of abbreviation for Frankfurt, or LON or LOD, depending on some places got it wrong. That's London Stock Exchange. So there's about 100 stock exchanges, and if you list on these things, you can open up, when you open up a brokerage account, you can just go in there, type in the stock ticker, which was assigned to the company by the stock exchange, and go in and buy that stock for the daily price of that stock. So that's just a quick rundown. If you feel like I left anything out or you have any other questions, just put it right here on YouTube, man. I'll put up another video and I'll explain exactly what you guys are having issues with. Follow the page, subscribe to the page, check out the last videos about volume and market cap and what is the Dow Jones. And we're going to continue to read that stock page so I can explain to you guys exactly how to read every section of that stock page. So by the time you're done with these videos, I'm probably going to make 10 or 12 videos. But by the time you're done, you can totally understand how to look up a stock symbol, how to know what the price is, and how to know if it's a good investment or not. All right, guys, we'll talk soon.